Very good morning, everyone. How are you all? Everyone fine. Last class, we started employee stock option plan. Correct? I think I have given you one question as homework. Have you done it? Bolo. No one has done? To come to question number 2. Let us revise once again whatever we have done. So employee stock option plan, I said option means a right but not an obligation. So in this plan, entity will given a right to employee, and under that right the employee can subscribe a specified number of shares at a predetermined price, that is known as exercise price. So normally in this chapter, exercise price will be lower than market price on grant date. Correct? Understood? But the option will be vested only when that vesting condition will be fulfilled. The day on which vesting conditions are fulfilled are known as vesting day. Correct? Understood? Now the option can be exercised during exercise period. During exercise period means exercise period will start only once vesting period is completed. And the day when the options are exercised is known as exercise day. Correct? So in this case the value of options will be recognized during the vesting period as an expense. Correct? So how to calculate option expense? Employee benefit expense. Correct? So we'll find the cumulative value of option which should be recognized as an expense during expired period. From that we'll minus expense already recognized in prior year. So that will be the value of option to be recognized as an expense during the current reporting period. What is cumulative value of option? Cumulative value of option means what? Number of employee expected to vest the options multiplied by options per employee multiplied by value of options. Value of option divided by total vesting period into expired period. Correct? Here value of option can be either intrinsic value of option or fair value of option. First preference will be given to fair value of option. If fair value of option is not given in the question, then use intrinsic value of option. What is the intrinsic value of option? Intrinsic value of option means market price on grant date, market price of shares on grant date minus what? Exercise price. So you can see we have used the word intrinsic value of option. So there is a difference between value of options and value of shares. Correct now. So we are recognizing value of option as an expense during vesting period, not value of shares. Correct now. So intrinsic value of option is equal to market price of shares. Market price of shares on grant date minus exercise price. Correct now. So just try to understand. I am using the word value of option. Option means right. Means right has also value. Right has also value. Correct now. So every right has value. So we are recognizing because we are giving right. So when we give right, so can I say it will be considered as an expense during vesting period. So for that right, what is the value? What is the value of services received from employee? So can the value of right will be equal to value of services received. Since the value of services cannot be determined reliably in this case, therefore we considered value of options. So what is the value of option? Intrinsic value of option is equal to market price on grant date minus exercise price. Minus exercise price. Correct? Understood? Then we have done accounting treatment. Accounting treatment, I said key on grant date no journal entry. Then during vesting period, at each accounting period, we recognize employee benefit expense. The journal entry will be employee compensation account debit to employee stock option outstanding account. Correct. Now we have also understood that stock option outstanding account is not a liability because there is no obligation to transfer any resource. So it will be considered as equity and it will be shown under the head reserve and surplus. Correct. Then employee benefit expense will be closed by transfer to profit and loss account at the end of each accounting period. Correct. Then during exercise period, when the options will be exercised, then on receipt of exercise money, the journal entry will be bank account debit to stock option outstanding account. And then on allotment of shares, the journal entry will be stock option outstanding account debit to equity share capital to securities premium. Stock option outstanding account will be debited with the sum total of what? Value of option plus exercise price. Value of option plus exercise price. Correct? Understood? Yes, sir. And if the vested options are cancelled, then we reverse the journal entry by passing what? Stock option outstanding account debit to general reserve. Stock option outstanding account debit to general reserve. This much we have done. First, let us come to question number 2. Then we'll come to some important points which I have not yet discussed. Correct? So a company grant 500 options on 1/4/1999 at rupees 40. So at rupees 40, 40 means exercise price. So this 40 is what? Exercise price. When the market price is 160, the vesting period is 2.5 years. The maximum exercise period is 1 year. So exercise period will start after completion of vesting period. Means total period become 2.5 plus 1 is equal to 3.5 year. Also 150 unvested options. Unvested options means unvested options during vesting period. Lapse on 1/5/2001 and 300 options are exercised on 30th June 2002 and 50 vested option lapse at the end of the exercise period generalized. Have you understood this point? Means what they want to say. So we are doing question number 2. What is the grant date? It is 1/4/1999. Correct? And they said 2.5 years. So this become 31st March 2000. This become 31st March 2001. And this become 31st March 2002. And this is 38th September 2001. So can I say this become vesting period, and from this exercise period will start. So this will be extended 1 year from this. So this will be 38th September 2002. 30th September 2002. Correct? Understood? Yes, sir. Then what they said, how many options granted? Well, 500 options were granted at an exercise price of rupees 40. At an means the market price of shares is 160. So what is the intrinsic value of option? That is 120. So you can see the fair value of option is not given, therefore we'll consider intrinsic value of option. Yes, sir. Correct. Then what they have said, 150 unvested options were lapsed on 1/5/2001. So on 1/5 somewhere यहाँ पर, on 1/5/2001, तो somewhere यहाँ पर, तो on 1/5/2001 150 options were cancelled. So out of 500 150 गया तो बचा कितना 350. Means how many options vested? So vested options are how much? 350. Vested options are 350. Correct. Now 300 options were exercised on 30th June. So 30th June somewhere यहाँ पर, तो on 30th June 2002, correct, 300 options were exercised and 50 options were left at the end of exercise period. So on this date 50 options were cancelled. Vested options were cancelled. I think you have understood. Bolo. Correct? Any doubt? Any doubt? Do we write down? Calculation of employee benefit expense. Correct. To write down year end. The first year end is what? For 1/4/2019 to 31st March 2000. Correct. So year end is 31st March 2000. Correct. So how many options? So we'll take 500 options. Correct. What is the intrinsic value? 120 divided by total vesting period 2.5 into 1. Correct. So it will be equal to 24,000. 24,000. Correct. So if in the question expected number of options to be vested is not given, then we'll take actual number of options at that year and one. Correct? Understood? So it means we'll expect that all the options will be vested. Correct? Then 31st March 2001. Once again, no cancellation. So we'll take 500 into 120 divided by 2.5 into 2, and from this will minus what? 24,000, which is already recognized as an expense. So it will be also what? 24,000. 24,000. Correct? Any doubt? No doubt. Everyone listening now? Because till now no one has responded. Correct? Then for the year ended, next year will be 31st March 2002. Correct? Year end is 31st March 2002. So can I say now the will recognize for 350 options, because actual number of options that is vested is 350 into what? 120 divided by 2.5 into 2.5 minus what? 48,000. So can I say this will be equal to 42,000 minus 48,000. It means, can I say we need to, means this is the reassessment of expense. So it is as simple as you remember provision for doubtful debt in Bachpan. If you created more provision, you reverse through P only. It is reversal of excess expense which you have recognized in first 2 years. Correct now. So 6,000 will be reversed. 6,000 will be reverse. Understood this point? Correct. Any doubt? No doubt. Then we'll pass journal entry. Write down books of company journal. So first journal entry will be done for 1999 2000. Write down 31st March 2000. What is journal entry? Employee compensation account debit to stock option outstanding account. How much? 24,000. 24,000. Bolo. Correct. Then in the same year we'll transfer profit and loss account debit to employee compensation account. Correct? यानी कि being option expense recognized being expense transferred to PL. Correct? First year done, second year. 31st March 2001. Same journal entry. Now I'm writing EC. In exam, don't write. EC account debit to, correct? Stock option outstanding account. Once again 24,000. 24,000. Correct? Being option expense recognized. Correct? Then add on profit and loss account debit to employee compensation account 24,000. 24,000. Correct? Then next year. Next year we recognize expense on 38 September. Correct? But it is not an expense. Means we need to reverse it. We need to reverse it. Correct ना? हमें reverse करना पड़ेगा. बोले या सुनो. Are you able to understand what I am saying? So what journal entry will pass? On 38 September 2001, we write down stock option outstanding account debit to employee compensation account. Correct? How much? 6,000. 6,000. Correct? Means this is nothing but changes in accounting estimate. So in this year, your employee compensation expense will reduce by 6,000. Your employee compensation expense will reduce by 6,000. Correct? Understood? इस बात को तो normally whenever there is changes in accounting estimate, we do changes on a prospective basis. Correct? It means the account will be affected in the year of change, not from the beginning. Correct? It means on 31st March 2002, what journal entry will pass? Employee compensation account debit to PL. Means it will not be credited to PL. It will be reduced from the employee benefit expense of this year. It will be reduced from the employee benefit expense of this year. Are you able to understand? There may be some other plan. There are many other expenses under employee benefit expense. So in under the heading employee benefit expense, वहां से हम reduce कर देंगे. So this is not credited to PL. It got reduced from what? It got reduced from employee compensation account. Employee compensation account. Correct? Have you understood this point? Yes, sir. This also you have understood? Correct. Then on vesting period. तो बोला on 30th June 2002, बताओ how many employee exercise the option? तो 300 employee. 300 employee. What is the exercise price? Exercise price is what? 40. Correct? So 340. This amount will receive, and then we'll do stock option outstanding account. Correct. For 300 employee, it will be 120, that is 36,000. To what? Equity share capital. Equity share capital. Equity share capital कितना होगा? 300 into. So they have not given the nominal value of shares. In this question, you can see they have not given the nominal value. Therefore, we can assume 100 is the nominal value. So this assumption we are taking that 100 is the nominal value. You can see the nominal value per share is not given. So assumption क्या ले लिया कि 100 is the nominal value. Correct. So this become 30,000. So two securities premium. Two securities premium. This will be 300 into 60, that is 18,000. That is 18,000. Correct. Understood. So लिखो being how many options exercised. लिखेंगे being 300 options exercised. Correct. We have done one compound journal entry. Then at the end of the exercise period, means on 30th September 2002, so vested options cancel. How many vested options cancelled? 50. Correct. तो क्या एंट्री पास करेंगे? स्टॉक ऑप्शन आउटस्टैंडिंग अकाउंट डेबिट. तो 50 into 120, that is equal to 6,000. 6,000 to general reserve. To general reserve, that is 6,000. So being 50 vested options cancelled. Correct. Very simple. बताओ. Understood? You can write down one note. It has been assumed that face value of equity shares is rupees 100. Is rupees 100. Simple. Correct. No doubt. Respond. Have you understood? Simple. So up to this, so I think very simple chapter, nothing to explain much. But there are some conceptual point which I need to discuss. It might happen you have that doubt also. So let us discuss that point first. Then we'll come to the other part of the question, other question in this chapter. Correct? So just try to understand. मेरी बात को. Suppose this is the vesting period, and I said market price on grant date is suppose 120 and exercise price is suppose 30. So intrinsic value is 90. Intrinsic value is 90. Correct? Understood this point? मेरी बात समझे? Now, can I say market price may change? Of course, will change during the vesting period. So it might happen market price become 150, then become 200, then actually it become 250. So exercise price remains same. Exercise price remain same. Correct now. And suppose on exercise day it become 300, then also this remains same. Means can I say intrinsic value of option will change due to change in market price. Intrinsic value of option. So intrinsic value of option will change due to change in exercise due to change in market price. So can I say in this case it become 120, then it become 170, then it become 220, then it become 270. Are you able to understand? Correct. Now one doubt will arise, sir, options are exercised on exercise day. Options are exercised on exercise day. So why we are taking intrinsic value on grant day for recognition of expense? Means we should consider this intrinsic value for recognition of option expense, because this is the benefit. Means suppose the options are exercised on this date, so actually the market price of shares is now 300 and they need to pay, means employee need to pay only 30. It means their benefit is what, 270. So their benefit is 270. It means now we should recognize the expense for entity by considering the intrinsic value on exercise day. So when I am saying intrinsic value on exercise day, it means market price on exercise day minus what, exercise price. But I have given one note that subsequent change in market price is not relevant for this chapter. Means any changes in the market price is not relevant for this chapter, means we should ignore it. Now the question arises, why we will ignore it? Have you understood? Doubt, have you understood? First you understood what I am explaining? Bolo. Have you understood this point? Have you understood this point? Now the question arises, why we are ignoring market price on grant day? Correct now. Sorry, why we are ignoring the market price on during vesting period, means changes in the market price during vesting period as well as market price during what, exercise period. This is the doubt. This is a doubt. Correct. Now just try to understand. Means everyone just try to understand. Key options was announced on this date. Options was announced on this date. Correct. Are you getting what I'm saying? Options was announced on this date. Means option was given to employee. Options was given to employee on grant date. Let us assume on 1/4/2020. Correct. Understood. Let us think in this way. मेरी बात समझना कि if equity share capital, means equity shares is issued on, मेरी बात समझना, on 1/4/2020 at rupees 120. If equity shares were issued on 1/4/2020 at rupees 120, correct? According to what journal entry we are passing on this date? कि bank account 120 to equity share capital. Equity share capital इसको 160 120. Let us assume 100 face value and 2 securities premium. How much? 20. This journal entry in the books of entity. What will journal entry in the books of shareholders? Investment account debit to bank. Investment account debit to bank. My question to you are, now suppose subsequently the market price become 125. Means subsequently, means after allotment of equity shares, if the market price of equity shares become 125, what journal entry company will pass for that? Means any subsequent change in the value of equity shares, any subsequent change in the market price of equity shares, what journal entry entity, means company will pass, not shareholders. I'm asking about company, but any changes in the market price or value of shares, what journal entry company should record? Can you say me what journal entry should be recorded? Everyone. Everyone respond fast. Have you understood my question what I am asking? I said कि equity share capital equity shares is issued on 1/4/2020 at rupees 120, and let us assume the nominal value of equity shares is 100. So we have done one journal entry in the books of company, bank account debit to equity share capital to premium, correct? Now subsequently the market price of equity shares has been increased from 120 to 125. So you can see there is an increase by 5. So what journal entry will do for that increase in the books of company? In the books of company. So I got answer no journal entry. Will pass no journal entry. 100% correct, no journal entry. But can you say why? Can you say why? 100% correct, no journal entry. We will not record any journal entry in the books of company. Will not record any journal entry in the books of company. Can you say me why? Everyone respond fast. So you 100% correct, will not pass any journal entry for subsequent change, will not pass any journal entry for subsequent change in equity. So for subsequent change in equity, correct, subsequent change in the value of equity. But why will not pass any journal entry for changes in the value of equity? Can you say me this point? Socho, socho, I am giving you 2 minutes. I want you to think, and if you can give me correct answer means you are chartered accountant. Correct now. So I am just giving you time so that you can think by your own. No, no, because they are sold, this is not correct. Because they are sold, correct ना? ऐसा तो ना होता है. This is not an asset. Means equity share capital is coming in the balance sheet or not? Of course, shareholders purchase the shares at a fixed price only. Means they purchase at rupees 120. They purchase at rupees 120. Correct? Understood? But now the price become what? 125. Now, but now the price become 125. So of course, if the value of equity shares is increasing, so can I say the net worth of the shares is also increasing? Means the value of total equity means the net worth of the company is also increasing. So why we are not passing journal entry for that? Actually, that only I am asking. It will be recorded at original value, not at market value. Why? That is my only question. You already said no journal entry. It means we are recording at original value, not at market value. That is the only question. Why? कुछ भी बोलते हो because of historical cause asset. अभी just try to understand the historical cause concept is for assets and liability, not for equity, not for equity. Just try to understand. I am saying a simple reason. However, मेरे को लगता है आप समझ चुके हो, but उसको आप interpret नहीं कर पा रहे हो. Just try to understand this increase or decrease, whatever means. If it is increasing, okay. If this is decreasing, it may decrease also. Suppose the price become 110, means the gain or loss, this gain or loss is of shareholders of company. Means the any increase or decrease in the value of shares, the gain or loss is of shareholders, not company. Are you getting what I am saying? Means the any gain or loss due to changes in the value of equity shares belong to shareholders, not to the entity. Therefore, if they want to, means if somebody want to record a journal entry, means the gain or loss should be recognized by the investor, not by the shareholders. Means can I say, due to changes in the market price, the who is exposed to gain or loss, means this gain or loss belong to shareholders, belong to shareholders. Therefore, no journal entry will be done in the books of company. Therefore, no journal entry in the books of company. Are you able to understand? Means due to changes in the market price of shares, there is a gain or loss, but that gain or loss belong to whom? Shareholders, not to the company. Therefore, no journal entry in the books of company. Have you understood? Yes. Yes. Now, you have correctly said it is not a profit of the company. It is not a profit of the company. It is a profit of the shareholders. It is a profit of the shareholders. Therefore, shareholders should pass journal entry. Therefore, shareholders should pass journal entry. Simply, यहाँ पर भी check करो. Once the options has been given on grant date, correct? Options means what? Equity, because that will be settled in terms of equity shares. Equity shares में तो जब आपने एंट्री पास किया एम्प्लॉय कंपनसेशन टू स्टॉक ऑप्शन आउटस्टैंडिंग अकाउंट, तो बताओ दिस इज ए लायबिलिटी और इक्विटी? ये लायबिलिटी है इक्विटी? इक्विटी. तो कैन आई से ड्यू टू चेंजेस इन द due to changes in the market price of shares, should you change the value of equity? No, we cannot change the value of equity, because stock option outstanding account is what? Equity, not liability. अगर हमारा liability होता तो of course liability का value change करना होता, but because it is equity, so once the equity is recorded, once the equity is recorded, the subsequent changes in the value of that equity is not permissible, is not permissible. Therefore, I have given one note that subsequent changes in the market price of shares, subsequent changes in the market price of shares is not relevant for this chapter, is not relevant for this chapter. Have you understood this point? Correct. Means can I say once the options is announced, जब आपने options announce किया, on that market price was what? 120. Means the options was announced based on the market price 120. Therefore, the equity was recorded at rupees what? One at what? 120 minus 30. That is what? 90. So due to changes in the market price, if the intrinsic value of option change, so that should not be considered. That should not be considered. Have you understood this point? This increase or decrease in the value of option, this belong to what? Employee. This belong to employee. So if the value of options is increasing, employee will become happy. Shareholders means company will not become happy, or company will not become what? Sad because of this. उन्होंने तो options announce कर दिया. Once the option announced, now whatever market price is there, company को कोई लेना देना नहीं है. कंपनी को लेना देना नहीं है. फॉर एग्जाम्पल आई अनाउंस अ बैच, जस्ट ट्राई टू अंडरस्टैंड. आई अनाउंस अ बैच at rupees 10,000, means the fees is what? 10,000. The fees is what? 10,000, and you got admission. You got admission. आपने admission भी ले लिया. Now any changes in the market price of my teaching should not affect this batch, because I will not change the price of this. Correct now? How my future batch may be affected. My future batch may be affected. Have you understood this point? Correct? Bolo. Have you understood? Any doubt coming in your mind? So can I conclude that subsequent changes in the market price of shares will not affect the value of options? Subsequent change in the market price of shares will not affect the value of options. Correct? If you have understood this, just write down yes sir, yes sir. Therefore, I will go to the next doubt. Everyone respond please fast. Have you understood or not this point? Now, now the second point which I am just explaining, listen it carefully, correct? Now, suppose options was announced on 1/4/2020 when the market price is equal to 120, exercise price is equal to 30, and and intrinsic value become what? 90. Everyone, correct? Now just try to understand what I am explaining. पहले समझो, then any doubt you can ask me. Now, even though options was announced on this date, correct? But can I say entity knows that this will be exercised during exercise period. Means even though options was announced on 1/4/2020, but the options will be exercised during exercise period, means during fourth year, correct? Means entity knows that the market price will be different. Market price will be different. Correct? Now, are you getting what I am saying? Means on this date, even though options were announced, can I say it is a known fact that it will be exercised on this date? Therefore, can I say we should take market price of exercise day? Market price of exercise day. Are you able to understand? But can I say employee benefit expense will be recognized during this period? Therefore, this market price is not known right now. This market price is not known right now. Therefore, what guidance note says, just try to understand, कि entity need to estimate what will be the market price on exercise day. What will be the market price on exercise day? मेरी बात को समझना, correct? Now suppose the estimation is that the market price is 300 and exercise price is equal to what? 30. Exercise price is equal to 30. So can I say this become estimated intrinsic value, that is 270. Estimated intrinsic value, correct? Are you getting what I am saying? So this is the estimated intrinsic value on exercise day, but options was announced on grant day. So what is the value of option? Means हमें निकालना है what is the value of option on grant day, because options was announced on grant day. Are you getting what I am saying? Therefore, guidance note says that we'll calculate present value of this. We'll find out the present value of this, and this present value of estimated intrinsic value is known as what? Fair value. Fair value of what? Grant day. Fair value of grant. Fair value of option on grant day. Fair value of option on grant day. Are you getting what I am saying? मेरी बात को कि we need to estimate the market price. Means entity need to estimate the market price on exercise day. Entity need to estimate the market price on exercise day. Then we need to find out estimated intrinsic value, and the present value of that estimated intrinsic value on grant day will be known as fair value of option on grant day. Correct? Means there are two concepts. Means either you calculate fair value of option on grant day, which is based on expected market price of shares, on exercise day, which is based on market price of shares on exercise day, or you calculate intrinsic value of option on grant day, which is based on actual market price of shares on which day? On grant day. Are you able to understand what I am saying? Means they have given two ways of calculation of expense. One is based on fair value of option, one is based on intrinsic value of option. One is based on fair value of option, one is based on intrinsic value of option. My question to you all, what do you think? Which is the better way? Fair value of option on grant day कि intrinsic value of option on grant day? बताओ क्या आपको ज्यादा बेटर लग रहा है फेयर वैल्यू ऑप्शन ऑन ग्रांट डे कि इंट्रिंसिक वैल्यू ऑप्शन ऑन ग्रांट डे? Which is more better approach? Means we should consider fair value of option on grant day ki intrinsic value of option on grant day. That is my question to you all. Everyone respond. तो फेयर वैल्यू ऑप्शन ज्यादा अच्छा लग रहा है, सुनने में भी अच्छा लग रहा है, करेक्ट ना? बोलो यस, बिकॉज इट इज बेस्ड ऑन expected market price of shares on grant day. Means guidance note also says if fair value option is a better technique, but can I say for calculation of fair value we need to estimate market price of shares on exercise day, which is quite difficult. Which is quite difficult. Are you getting? We can estimate the value of asset, but can I say estimation of market price of shares after some day means during after some day means in future is कैसे estimate कर दे? It depends upon what external factor, internal factor. Market price जो stock exchange में होता है that is totally based on internal factor as well as external factor. चलो we can have control over our internal factor, but how can we control external factors? Correct now? Are you getting what I'm saying? So if there is a change in government, then also market price will be affected. If there is a terrorist attack, then also market price will be affected. If there is a foreign recession, foreign country recession, that will also affect what market price of shares. Are you able to understand? Right now, due to corona, also market price of shares is affected. Are you able to understand? So to estimate market price of shares on exercise day, it is quite difficult. Therefore, they have given two options. What they have said, if you can estimate fair value, okay, thank you very much. If you can estimate fair value of option, thank you very much. But if you cannot estimate fair value of option, then do journal entry by taking intrinsic value of option. Are you getting? Means they have given two methods. One is based on fair value, one is based on intrinsic value. Correct? Are you getting? Therefore, I have said कि fair value is given in the question, then use fair value. Otherwise, use intrinsic value. However, in CA Inter, most of the question will be based on intrinsic value. बट देयर आर सम क्वेश्चन गिवन इन आरटीपी रिवीजन टेस्ट पेपर जहां पर उन्होंने फेयर वैल्यू भी दिया है. तो इफ फेयर वैल्यू ऑप्शन ऑप्शन बता रहा हूं, इफ फेयर वैल्यू ऑप्शन इज गिवन द क्वेश्चन, यूज फेयर वैल्यू, otherwise use intrinsic value. I think now you have understood this point. Correct. But once the fair value, just try to understand, once the fair value option is determined on grant date, then it will not be changed. It will not be changed because subsequent changes in the fair value, the gain or loss will be borne by employee, not by entity. So once the fair value is calculated on grant day, then it will not be reassessed. It will not be reassessed. Therefore, you should take fair value of option on grant day or intrinsic value of option on grant day. So subsequent changes in this value is not relevant for this chapter. Have you understood this point? Bolo. Have you understood this 2 point? Everyone respond. Any more doubt you have, you can ask me about this chapter. One last day one doubt was asked कि sir, if the market price of shares is less than exercise price during what? Exercise period. So I have said then employee will not exercise their right because they have a right but no obligation. They have a right but no obligation. Correct? Are you getting? So if the market price of shares is less than exercise price. So suppose if the exercise price is 30 and the market price become 20. So of course they will not exercise the option. So one of the student has asked me, sir, then it is a loss for employee. There is no loss. Just try to understand. An option was given. An option was given. Correct now. An option was given based on current circumstances. Correct now. Just try to understand. If the market price of the shares start falling, अगर market price of shares start falling, then automatically employee will be demotivated during vesting period only. मेरी बात समझो, अचानक से market price कम नहीं होता है, अचानक से market price कम नहीं होता है. Are you getting what I am saying? So if market price started falling, so of course it will fall during exercise period also, during vesting period also. तो if market price fall होता है, तो हमें अंदाजा हो जाता है this company is a bad company. तो automatically will be demotivated during what vesting period also. करेक्ट ना. आपका डाउट ये था तब तो ये सर उन्होंने अपना सर्विस प्रोवाइड कर दिया, उनका क्या होगा. करेक्ट ना. तो जस्ट ट्राई टू अंडरस्टैंड. सिंपल लॉजिक इज व्हाट, keep the market price of shares become less than exercise price during exercise period. So why they will exercise? They will not exercise because they can purchase directly from market. They will purchase directly from the market and there is no loss for the employee. There is no loss for the employee. I think you have understood. I think you have understood. Bolo. Now we can come to question number 3. This is the most favorite question of the institute. Normally when they want to ask a question of 4 or 6 marks, this is the question they give. Correct? This is the question they give. X company has has its share capital divided into equity shares of rupees 10 each. On 1/10/2008, it granted 20,000 employee stock option at 50 per share when the market price was 120 per share. The options were to be exercised between 10 December 2008 and 31st March 2009. You can see the vesting period is less than 1 year. The vesting period can be less than 1 year. The employee exercised their option for 16,000 shares only and the remaining options lapse. The company closes books of account on 31st March every year. So journal entry with narration as would appear in the books of the company up to 31st March 2009. Correct? Understood? So what they want to say. Question number 3. The options was announced on 1/4/2008. How many options? 20,000. Correct? Exercise price how much? 50. Exercise price 50. Market price is equal to how much? 120. Intrinsic value is equal to what? 70. Once again, fair value of option is not given. Therefore, we are considering what? Intrinsic value. Then on 10/12 ना check करेंगे. On 10 December 2008, this is the vesting day and exercise period is 31st March 2009. So this is exercise period. Correct? So how many options were exercised? The employee exercised the option for 16,000 shares. So बोला कि they exercised. So they have not given the date. So during this period, 16,000 options were exercised. Means 4,000 options were cancelled. 4,000 options were cancelled. Are you getting what I am saying? Means one thing is clear that vested options were what? 20,000. Vested options were 20,000. Are you able to understand what I am saying? Vested options were 20,000. Correct? Now, just try to understand. Because here, in this question, vesting period and exercise period fall in the same year. Vesting period and exercise period fall in the same period. The question arises, we should recognize expense for 20,000 options or 16,000 options, because we know that options exercise were 16,000. तो क्या नहीं इससे पहले 20,000 ऑप्शंस का एक्सपेंस रिकॉग्नाइज करो, फिर 4,000 का रिवर्स करो, क्या नहीं से बकवास बात है. तो इन दिस टाइप ऑफ क्वेश्चन can I say we should recognize expense directly for 16,000 shares at year end only, and at year end is 31st March 2009. So we are assuming that the shares are exercised on year end. Are you getting what I'm saying? So I'm just writing journal entries. What journal entries? So journal entries will be done from 10/12/2008 to 31st March 2009 because they have not given the date. Correct? So directly we should recognize expense for what 16,000 shares. तो बताओ exercise money will be received for 16,000 shares. So 16,000 into what 50, that is 8 lakh, and we write down employee compensation account debit 16,000 into what bolo 70, that is how much 11 lakh 20,000 to equity share capital. Equity share capital, what is the nominal value? 16,000 into 10, that is 1,60,000 to securities premium. To securities premium, it will be 16,000 into what 110, that is equal to 17 lakh 60,000. Have you understood? Means directly one journal entry we are passing instead of recognizing stock option outstanding account. Directly we are passing journal entry for 16,000 options which got exercised. Have you understood this point? Then on 31st March 2009 year end, employee compensation will be transferred to PL account. PL account debit to employee compensation account. How much? That is 11 lakh 20,000. 11 lakh 20,000. Understood this point? Bolo. Any doubt? Have you understood this question? Have you understood this question, everyone? Yes, sir. Correct. Come to question number 5. Question number 5. So one doubt came, sir, why you have debited employee compensation account in the first journal entry? Just try to understand, because your vesting period and exercise period falls in 1 year, the same year only. Therefore, there is no need to pass employee compensation to stock option outstanding account. वो journal entry pass करने की जरूरत नहीं है ना, करेक्ट ना? तो it means आप पहले 20,000 का रिकॉर्ड करते, देन 4,000 का रिवर्स करते, वो झमेला होता, करेक्ट ना? बिकॉज यू नो एट ईयर एंड कि 16,000 शेयर्स वर एक्सरसाइज, so better you record only expense for 16,000 shares. So there is no need to there is no need to uh, there is no need to record stock option outstanding account, because that is converted into equity share capital during this year only, during the same year only. Correct now? Therefore, in this entry we have written employee compensation account debit. समझे ना? Correct? नहीं तो आप क्या करते? पहले आप करते employee compensation to stock option outstanding account debit, फिर ये स्टॉक ऑप्शन को यहाँ पे डेबिट करते, तो वही मतलब होता ना. तो वी हैव डन वन कंपाउंड जर्नल एंट्री. वी हैव डन वन कंपाउंड जर्नल एंट्री. अंडरस्टूड नाउ? Yes, sir. Come to question number 5. Ajanta grant 120 share option to each of his 460 employees. Each grant is conditional on the employee working for Ajanta for next 3 years. Ajanta has estimated that fair value of each share option is 12. So it means the fair value of option is given. Fair value of option is given. Understood? Ajanta estimate that 25% employee will leave during the 3-year period and so forfeit their right to the share option. Well, during this 3 year, 25% employee will leave. Everything turns out exactly as expected. बोला जैसा सोचा वैसा ही हुआ. वाह क्या बात है. जैसा सोचा वैसा ही हुआ. Calculate the amount to be recognized as expense during the vesting period. Correct? Understood this point? मेरी बात समझ पा रहे हो? तो बड़ा अच्छा है, लिख लो. तो we are doing question number 5. Only they have asked you to calculate the expense. देखो, calculation of amount to be recognized as expense during vesting period. Correct? So write down year end. Then you should write down this calculation and then expense. Correct? तो year end 1. तो बताओ how many employee? बोला 460 employee. करेक्ट. तो 460 employee में कितने चले जाएंगे? 25% during the vesting period. Means 75% will be retained. Correct? And into 120. Into 120. So this is the 120 is the option per employee. Then into what is the fair value? 12 divided by total vesting period 3 into 1. How much? कितना आ रहा है चेक करेंगे everyone. It's coming how much? 460 into 75% into 120 into 12 divided by 3. It is 1,65,600. Then year end 2, same 460 into 75% into 120 into 12 divided by 3 into 2 minus 1,65,600. So I think it will come same only 1,65,600. Check karo. Then point number 3, same 460 into 75%. बोला कि the expected become actual. So in third year we take actual. So because उन्होंने estimate किया था 25% will leave and that become actual for future also. Correct? So into 120 into 12 divided by 3 into 3 minus what? Minus it will be 3,31,200. The same answer will come 1,65,600. Understood? Have you understood fair value? So fair value of option was given in this question. So even though whenever fair value of option is given, then market price of shares given on grant date उसको consider मत करना. Means intrinsic value of option should not be considered whenever fair value of option is given. इतना समझे? Have you understood? Any doubt? Simple. I think you have understood. Question number 6. Come to question number 6. The following particulars in respect of stock option granted by a company are available. Grant date 1 April 2008. Number of employee covered 300. vesting condition, continuous employment for these, correct? Understood? Continuous employment up to 31st March 2011. 31st March 2011. Correct? Nominal value per share is 10. Nominal value per share is 10. Exercise price per share is 40. Fair value of option per share on granted. Oh, fair value has been given. तो in this question check करो market price दिया ही नहीं है. देता भी तो intrinsic value calculate नहीं करते because they have given fair value. Exercise date is July 31st 2011. Exercise date, correct? The number of option to vest per employee. The number of option to vest per employee shall depend upon company's average annual earning after tax during vesting period as per the table below. हो क्या बोला, क्या बोल दिया, चेक करेंगे. The number of option to vest per employee shall depend upon company's average annual earning after tax during vesting period as per table below. बोला if average annual earning after tax, थोड़ा चेंज करेंगे. This is the number of option per employee. So if average annual earning after tax is less than rupees 100 crore, then number of option per employee will be nil. Number of option per employee will be nil. आप समझे इस पॉइंट को? If it is rupees 100 crore means average annual earning after tax is rupees 100 crore to less than 120 crore, then number of option per employee will be 30. Yes sir, ठीक है, okay. And if it is 120 crore or less than 150 crore, then it will be 45. Okay. And above 150 crore, then it is 60. Okay sir, समझे? Now they have given position on 31st March 2009. Means क्या बोलता है? What is the grant date on 1/4/2009 2008? And first year is 31st March 2009. Second year is 31st March 2010. Third year is 31st March 2011. And exercise date बोला 31st July 2011. Correct? Understood? What is the total number of employee is equal to 100. Sorry, 300. Correct? Then nominal value is not required. Fair value of option is what? 20. Fair value of option is 20. And number of option per employee depend upon average earning. Means now we need to find out the actual position as on this date. Actual position क्या है? तो क्या लिखता है? चेक करेंगे. The company expect to earn 150 crore after tax on an average per year during vesting period. Means what is their expectation? कि their earning will be what? 115 करोड़. 115 करोड़. तो ये कौन से स्लैब में चेक करेंगे? कैन से दिस विल कम इन दिस स्लैब. मींस नंबर ऑफ ऑप्शन पर एम्प्लॉय will be 30 as per the expectation at year end 1. As per the expectation at year end 1. इस बात को समझे? तो कैन से इट मींस number of option per employee will be 30. Correct? Yes sir. Then what they have given? Number employee expected to entitled to option. ये भी दे दिया कि how many employee they are expected to entitled to option on vesting day. तो can I say number employee we will take 20 280 sorry 280. Understood this point? बोलो. Are you able to understand? Correct? Means if you calculate calculation of expense to be recognized during vesting period, The first is year end 31st March 2000, 31st March 2009. But how many employee will take? Will take 280. How many option per employee? 30. Correct. What is the fair value of option? 20 into divide by 3 into 1 divide by 3 into 1. This is totally based on expectation. Totally based on expectation. So 280 into 30 into 20 divide by 3. So कितना आया 56,000 will be the expense of first year. Have you understood this point? Correct. Can you do second year and third year by your own? I will not read. Can you do second year and third year by your own? Let's see whether you can do second year and third year by your own. Don't see the solution. Don't see the solution. Solution मत देखेंगे. The second year position on 31st March 2010, company expect to earn 130 crore after tax on an average per year during vesting period. Number of employee expected to entitle to the option is 270. Position on 31st March 2011, the company earned 128 crore after tax on an average per year during vesting period. Number of employee entitled to option is 275. Correct? Number of option entitled to option means now this is actual number. देखो यहाँ expected नहीं लिखा है, so it means on vesting day always we take actual number of employee, actual number of employee. Now position on exercise period, out of 275 265 एक्सरसाइज किया तो 10 बिकम नलायक, उनका फॉरफिट हो जाएगा, वेस्टेड ऑप्शन फॉरफिटेड. करेक्ट. तो कंप्यूट द एक्सपेंस टू बी रिकॉग्नाइज्ड इन ईच एंड वैल्यू ऑफ ऑप्शन फॉरफिटेड वो भी निकालने वाला. कैन यू डू फॉर सेकंड ईयर एंड थर्ड ईयर बाय योर ओन? Have you done it everyone? चलो बताओ. On 31st March 2010, correct. Now number of employee, how much they have given? Number of employee 270. 270. What will be the option per employee? That is based on the earning. Earning they are expecting 130 crore. So when the earning they are expecting 130 crore, that will be in this slab. So it will be now 45 per uh, 45 option per employee. Correct. Into fair value option, divide by 3 into 2 minus 56,000 minus 56,000. Have you understood this calculation? Yes sir. तो ये कितना आया 270 into 45 into 20 into 2 divide by 3. So that is 1,62,000. So 1,62,000 minus 56,000. How much? So that is 1,06,000. 1,06,000. आपका आंसर नहीं आया मेरे पास. Then 31st March 2011. How many Actual number employee 275, and option per employee will depend upon earning, actual earning, that is 128 crore. तो 128 crore कौन से स्लैब में आएगा चेक करेंगे. दिस विल बी ऑन द सेम स्लैब. तो दिस इज व्हाट 45 per option, 45 option per employee into 20 divide by 3 into 3 minus what 1,62,000. Correct. So this is coming how much check करेंगे 275 into 45 into 20 is equal to 2,47,500. 2,47,500 minus 1,62,000 is equal to how much? Minus 1,62,000 is equal to 85,500. Understood? But no one has answered. Why you have not answered? Have you understood the question or not? Means in this case we need to also calculate option per employee depending upon the plan. वो plan के हिसाब से आपको calculate करना पड़ेगा. Have you understood now? Respond fast. So this type of question also they can ask only for the calculation of option expense. Means this question will be for lengthy hai, but solution is very simple. Correct now? It will be of 4 marks or 6 marks in exam. Correct? You have understood, but you have not given me the answer. Why you have not given answer? Correct? Now they have also asked you to find out value of option forfeited. Write down value of option forfeited. तो बताओ how many employee vested option, that is 275 employee, but how many employee exercise 265 into what 45 into what 20. Correct. तो ये कितना हो जाएगा 10 into 45 into 20. तो 9,000 is the value of option forfeited. 9,000 is the value of option forfeited. Understood? Correct. Of course, if they ask journal entry, you can do it. Journal entry is very simple, that you can do it by your own. Correct? इतना समझ में आया? Have you understood? Correct? Any doubt? In these questions, even though they have not asked, but will prepare account. Sometime in exam they do not ask journal entry, they ask you to prepare account. तो अगर account बनाने बोले तो किस तरह बनाएंगे? तो लिखो books of which company? The name of the company is not given. We will first prepare employee compensation account. Of course you can do it. So let us do it. So on 31st March 2009, we write down 2 stock option outstanding account. Correct? How much? 56,000. And this will be transferred to what PL? By PL 56,000. Then next year 31st March 2010, to stock option outstanding account. How much? 1,06,000. Expense is 1,06,000. So on 31st March 2010, we write down by PL 1,06,000. This also done. Then on 31st March 2011, once again, to stock option outstanding account, it is 85,500, 85,500. Then on 31st March 2011, by PL, it is 85,500. Understood? This is one account. If suppose they ask, ठीक है, in the given question they have only asked calculation of expense, but अगर account पूछ लेगा तो कैसा बनाएंगे? Then we'll prepare stock option outstanding account. Can we start? We'll start with first year 31st March 2009 by employee compensation account by EC. You don't write EC in exam, correct? 56,000. And on 31st March 2009, this will be balance to balance carried down 56,000. Then on 1/4/2009, by balance brought down 56,000, 56,000. Correct? Then on 31st March 2010, by employee compensation, it is 1,06,000. 31st March 2010, to balance carried down, it will be 1,62,000. टोटल भी कर देना एग्जाम में. Then on 1/4/2010, by balance brought down 1,62,000. Then once again on 31st March 2011, by EC employee compensation, that is 85,500. Then 31st March 2011, once again balance to balance carried down 85,500. Then we'll come to exercise period and we will extend it for the next year 1/4/2011, by balance brought down, that is sorry, this total is 2,47,500, 2,47,500. Understood? Then can I say you will receive exercise money to bank account debit to stock option outstanding account, correct? So what is the date kya tha? On 31st July. On 31st July 2011, by bank, for how many employee? It is 265 employee into how many option? 45 option, correct? Into what is the exercise price, कितना था check करेंगे. Exercise price is 40, 40. Exercise price is 40, correct? So 265 into 45 into 40 is equal to 4,77,000, correct? Understood? Then we'll allot equity shares to increase what stock option outstanding account debit to equity share capital to securities premium. So on the same date, on 31st July 2011, We'll do 2 equity share capital. 2 equity share capital. Correct. So it will be 265 into 45. What is the option? What is the nominal value of shares? 10. So nominal value कितना है? 10. So it is 265 into 45 into 10 is equal to how much? कितना है ये? This will come 1,19,250. 1,19,250. Correct? Understood? So 265 into 45 into 10. Correct. 2 securities premium will be how much? Securities premium will be how much? Can you give me what will be the amount of securities premium? If you can give me the amount of securities premium, means you have understood. Can you give me the amount of securities premium, everyone? Can you give me the amount of securities premium, everyone? I want answer from everyone. Respond fast. Now, everyone, very correct, very good, excellent. So can I say the fair value of option is 20, exercise price is 40, so total becomes 60 minus 10 nominal value. It means 50 is the premium per share. 50 is the premium per share. This is the value of option. I said this is the value of option. This is what exercise price. This is the total consideration received. Out of that 10 is nominal value. The balance 50 is what? Your premium. Very good. Excellent. So this is 265 into 45 into what? 50. Correct. So this will come 5,96,250 and the balance vested options will be cancelled. So we write on 2 general reserve, 2 general reserve. 2 general reserve will be how much? How many nalayak employed? 10 employee into 45 into 40. Correct? यही होना चाहिए ना. 10 employee 45 into 40, that is coming how much? Sorry, 20. It will be 20. So this will be 9,000. Correct? And you can see this account will be closed. ये account close हो गया. Correct? So for this last year I have done this account. If suppose in exam they have asked account, so you should be able to prepare this account. For this last year I have just given this account in as a class assignment. Understood this point? ये समझे? Any doubt? No doubt? Let us come to one more question. Question number 4. Question number 4. One more question. Question number 4. So what they have written? Choice limited grant 100 stock option to each of his 1000 employee on 1/4/2005 for rupees 20 depending upon employee at the time of vesting of the option. The market price of share is 50. The market price of share is 50 and the options were given at rupees 20, correct? Then what they have written? This option will vest at the end of year 1 if the earning of choice limited increases by 16%. Increases by 16%. बोला कि this option will vest at year end 1 if the earning increases by 16%, means vesting period will be 1 year, correct? Or means if the condition is not satisfied, so one more chance will be given. It will vest at the end of year 2 if the average earning of 2 year increases by 13%. So average earning of 2 year increases by 13%, then vesting period will be 2 years. Otherwise condition will not be satisfied. Or lastly, means they have given one more chance, it will vest at the end of third year if the average earning of 3 years will increase by 10%. Means can I say they have, in this we need to estimate the vesting period, because vesting period can be 1 year or 2 year or 3 year, 1 year or 2 year or 3 year. 5,000 unvested option lapsed on 31st March 2006, 4,000 unvested option lapsed on 31st March 2007, and finally 3,500 unvested option lapsed on 31st March 2008. Now following is the earning of choice limited. They have given earning of choice limited कि 31st March 2016 2006 actual position is 14%, 10% and 7% in these 3 years. 850 employee exercise their vested option within a year and remaining options were unexercised at the end of contractual life. Pass journal entry for the above. Correct? Understood? So journal entry you can do it. Journal entry you can do it. Will do only what? The recognition of expense. So what they want to say check करेंगे. Everyone. So on 1/4/2005 the options were announced. Option to how many employees are 1000. Option per employee 100. Correct. Exercise price 20. Market price 50. So intrinsic value is 30. Correct. Intrinsic value is 30. Why? Because fair value of option is not given, so we'll take what? Intrinsic value. Then at year end 1, 31st March 2006, what they said? If the earning increases by 16%, तो बोला vesting period will be equal to 1. Vesting period will be equal to 1. Correct? Or will go to what? 31st March 2007. If the average earning of the first and second year increases by 13%, then vesting period will be 2 years. और बोला कि लास्ट चांस देंगे कि 31st March 2008 कि if the average earning of the first, second and third year, आप समझ रहे हो वो कितना होगा? Increases by how much? They have said 10%. Then vesting period will be 3 years. Otherwise option will be forfeited. Correct? Now actual earning कितना है? Check करेंगे. Actual earning is equal to 14%. Means can I say first year condition not satisfied? Condition not satisfied. Then actual earning of first year and second year लेंगे. So it is 14% plus 10% divide by 2. ये कितना आया बताओ? 14% plus 10% divided by 2, 12%, means condition not satisfied. Condition not satisfied. Then actual earning means average actual earning of 3 years will be how much? So 14% plus 10% plus 7% divide by 3 is equal to how much? Check करेंगे. It is 10.33. Means condition is satisfied. Means condition is satisfied. Means one thing is clear that actual vesting period will be what? Actual vesting period will be what? 3 years. Means can I say if I say vesting period, so actual vesting period is 3 years. actual vesting period is 3 years. Up to this any doubt? I think no doubt. Correct. Now मेरी बात को समझना. Can I say in first year condition is not satisfied? In the first year condition is not satisfied. Means can I say condition may be satisfied in second year or third year? Correct. Condition may be satisfied in second year or third year. But in at the end of first year you don't know about the actual position. आपको ये information नहीं पता है. Means at year end one, even though information is given in the question, but actually in practical scenario you don't know the actual information of second year and third year at year end one. Means one thing is clear that vesting period cannot be 1 year, but vesting period can be second year or third year. Means we need to estimate what whether it will be second year or third year. My question to you all, batao, we will take second year, means we'll take vesting period to be 2 year or 3 year for first year calculation. Means we need to estimate the vesting period, so you need to consider 2 year ki 3 year. ये बता दो everyone. Means at the end of the first year we need to estimate whether the condition will be satisfied in second year or third year. If you are expecting that condition will be satisfied in second year, then vesting period will be second year. If you are expecting that condition will not be satisfied in second year but condition will be satisfied in third year, then vesting period will be 3 year. Correct. But no information about the expectation has been given. Means we need to estimate on some reasonable basis. Correct. Now are you getting? But you are absolutely correct. It will be what, 2 year. Correct. Means can I say just try to understand. If you ask employee, because option has been given to the employee, if you ask employee that whether you will be able to fulfill the condition second year, of course they will say yes. Means right now you are preparing for CA inter exam. If I ask you whether you will pass, so of course even though your preparation is not good, you will say you will pass only. Means always we think in positive way when it comes to the performance point. Performance point means on the expectation. One thing is clear that for first year vesting period will be estimated to be what, 2 year. But in second year, one second condition is not satisfied. Means can I say we'll estimate that, we'll expect that the condition will be satisfied in third year. Means for second year vesting period will be 3 year. Have you understood this point? Bolo. Have you understood this point? Correct. Have you understood this point? Correct. Now, whenever in exam they ask only calculation of expense now, so always do calculation of expense in some proper way. So I'm just giving you the statement right now. Statement of calculation of expense to be recognized during what? Vesting period. So whenever they ask only what expense, तो थोड़ा सा सिस्टमेटिक ऑर्डर में करेंगे. तो यहां लिखेंगे ईयर एंड, that is 31st March 2006, 31st March 2007 and 31st March 2008. Correct. Number of options expected to vest. So what they have said at year end one, how many option is going to what, cancel or lapse? It is 5,000. So total number of option was 1,000 employee into 100. Means total number of options कितना था? It is 1 lakh. Check करो, 1 lakh. Out of which how much lapse? 5,000 in the first year. Then how much left? 4,000 in second year. Then how much left? Then 3,500 is what? Left. So can you see, we know the actual position, the 1 lakh minus 5,000. So how many options expected to vest is 95,000 options. Then 91,000 options. Then 87,500 options. Understood? Correct? Understood this point? Then write down total fair value, your total value of options. So we'll multiply by intrinsic value to 95,000 into what? 30 is equal to 28 lakh 50,000. यहाँ करेंगे 95,000 into 30, 91,000 into 30, 87,500 into 30. करेक्ट? तो ये कितना आ जाएगा? 28 लाख 50,000. Then 91,000 into 30 is equal to 27 lakh 30,000. Then 87,500 into 30 is equal to 26 lakh 25,000. Correct? Are you able to understand what I have done? Yes, sir. Then can I say we write down expected vesting period. Vesting period. So for first year it is 2 year. Then for second year it is 3 year. Then for third year it is actually 3 year. Actually 3 year. Correct? Understood? This point? Correct. Then I down cumulative expense to be recognized till reporting date. Till reporting date. Correct? So cumulative options expense. So first year it will be 28 lakh 50,000 divided by 2. So 28 lakh 50,000 divided by 2 is equal to 14 lakh 25,000. Then for second year it will be 2 by 3 करेंगे. So 27 lakh 30,000 into 2 by 3 is equal to 18 lakh 20,000. 18 lakh 20,000. And for third year it will be 3 by 3. So it will be 26 lakh 25,000. Correct now? तो यहाँ हमने किया 1 by 2, यहाँ हमने किया 2 by 3, यहाँ हमने किया 3 by 3. Have you understood this point? Yes, sir. Then we'll find out. Correct. Expense to be recognized for the year. So first year it will be 14 lakh 25,000 only. Second year it will be 18 lakh 20 minus 14 lakh 25,000. Correct? So 18 lakh 20,000 minus 14 lakh 25,000 कितना आया? That is coming 3 lakh 95,000. And third year it is 26 lakh 25,000 minus this, इसमें minus करेंगे, so that will come 8 lakh 5,000. तो whenever they ask only option expense था, तो आप थोड़ा सा इस तरह से कैलकुलेट कर लीजिएगा, ताकि because this only this statement will have 4 marks, only this statement will have 4 marks, so you need to calculate in a correct way. I think journal entry you can do by your own. Journal entry you can do by your own. Bolo. Journal entry has given a solution also. Correct. I think fourth point, question number 4 also you have completed. Any doubt? So we completed all the questions based on ESOP. We completed all the questions based on ESOP. Now we'll take one more topic which is very simple, that is employee stock purchase plan. Employee stock purchase plan. Correct. I said initially that there are two topics which is based on equity settled. Correct. That is one ESOP and one is ESPP. Both is in our syllabus. The difference between ESOP and ESPP is what? Under ESOP, there are some future compliance. Under ESPP, there is no future compliance. It is based on some past services received. Correct now? Are you getting what I am saying? Just write down. ESPP, ESPP is a plan under which under which entity offer shares shares to its employee at a discounted price at a discounted price as a part of public issue as a part of public issue. देखो, it is also known as sweat equity shares. Sweat equity shares. ठीक है. Now from the name sweat only what it is understood that कि already sweat means what, कि अगर आप काम करोगे तो पसीना आएगा. करेक्ट ना? तो from that name it is understood that कि this is due to some past services. करेक्ट ना? Means actually the difference क्या है? If I say from accounting point of view, what is the difference between, अगर आप चेक करो ESOP and ESPP, can I say ESOP is not a part of public issue. Correct? Means this is a separate plan announced. Correct now? So this is an offer given to employees separately, which is not a part of public issue. But ESPP is a part of public issue. Is a part of public issue. Have you understood? Means whenever there is some public issue of shares, then out of that number of shares which is going to be issued, some shares will be what? Some shares will be separately taken out, which is only given to employee. Means that can be subscribed only by employee at a discounted price. At a discounted price, that is known as what? ESPP. Correct? Understood? Second, can I say it is based on vesting condition? Based on vesting conditions. But in this case, there will be no vesting conditions. No vesting conditions. Means can I say कि ESOP is based on vesting condition, means some condition need to be fulfilled in future. But ESPP is not based on vesting period, means there will be no vesting period for ESPP. Only there will be exercise period. Only there will be exercise period. Correct? Understood? Means how you will find out in exam whether it is a question of ESOP or ESPP. So can I say देखो, it consists of both vesting period and exercise period, but in this it only consists of what? It consists of only exercise period. Means in case of ESPP, there will be no vesting period. There will be no vesting period, only exercise period. However, the Jana entry will be same only. Means I'm not going to give you the separate Jana entry for this. Let us directly come to one question. Let us directly come to one question. Question number 7, which is one of the Miss favorite question. Means institute normally ask this type of question in exam. Normally ask this type of question in exam. Correct? तो क्या क्वेश्चन है चेक करते हैं what they have given. I have taken one good question. Correct. Directly I have taken a good question. On 1st April 2006, a company offered 100 shares to each of its 500 employees at rupees 40 per share. तो on 1st April company offer किया and the employer given a month to decide whether or not to accept the offer. Means 1 month time diya to decide whether they want to accept or they do not want to accept. Means this is exercise period. This is not vesting period. Means there is no vesting condition. Means it is a question of ESPP. It is a question of ESPP. Correct. The shares issued under the plan shall be subject to lock-in on transfer for 3 years from grant date. Means what they are saying? If the shares are subscribed, so there will be some restriction that these shares cannot be sold for 3 years. Means just try to understand. In ESPP, normally they give some post restrictions. Post restriction means once you purchase the shares, but now you cannot sell it, some lock-in period will be there. Some lock-in period will be announced. So there will be some lock-in period that these shares cannot be transferred for how many years? 3 years. Correct. The market price of shares of the company on grant date is 50 per share. Due to post vesting restriction on transfer, the fair value of shares, this is the fair value of shares, not fair value option. Means the fair value of shares and fair value option are two different terms. Fair value of shares and fair value of options are two different terms. The fair value of shares issued under the plan is estimated to be 48 per share. On 30th April 2006, 400 employees accepted the offer and paid rupees 40 per share purchase. Nominal value of each share is 20. Recorded issue of shares in the books of company under the aforesaid plan. The question is very simple. Only I need to explain you some point. मेरी बात समझना. Just try to understand. Just try to understand. Correct? Suppose you went to the market to purchase mango. To purchase mango. Correct? Understood? Now, there are two type of mango. Correct? One is the mango which is pakka mango, and there are some mango which are right now kacha. You know pakka kacha? Means this kacha mango will take some time to become pakka, and then only it can be what? Consumable. Then only we can consume it, or we can eat it, and we can enjoy it. Are you able to understand? So in the mango market, there are two type of mango. One is pakka, one is kacha. Can the kacha mango is with some restriction? Restriction is what? That it cannot be consumed right now. It will take 7 or 8 days to become pakka, and then only it can be consumed. Then only it can be consumed. But pakka mangoes can be consumed today only. Now, the market price of this mango is 100 per mango. per mango. Rupees 100 per mango. Means if you want to buy pakka mango, sorry. If you want to buy pakka mango, then you need to pay how much? 100 per mango. But just try to understand. Suppose I want to purchase kacha mango, not pakka mango. Are you getting what I am saying? I want to purchase kacha mango. My question to you all, whether I will pay 100 or I will pay more than 100 or I will pay less than 100, means the mango vendor will ask me 100 rupees or more than 100 rupees or less than 100 rupees. ये मुझे बताओ. Everyone. Means how much I should pay? I should pay equal to or more than or less than rupees 100. मुझे ये बता दो. Everyone. Correct. So can I say, if you want to buy kacha mango, so of course you will pay less than what? Less than 100. Less than 100 means, can I say, value of mango with restriction. Value of mango with restriction will be always less than value of mango without any restriction. Without any restriction. Now come to the stock market. Now come to the stock market. Correct? Understood? Correct? Now, once the employee will exercise their offer, means this ESPP. So after exercise, can I say, in stock market there will be two type of shares. One is shares without any restriction. One is shares which is issued under this plan, that will be with restriction. With restriction. Are you getting what I am saying? Correct? So now after exercise, I am saying once the employee exercise their option, then it will be available in the stock market. Then it will be listed because the shares are listed. It will be available in the stock market. But in stock market now there are two type of shares. One is with restriction, one is without restriction. When I am saying without restriction, means it can be traded in the market. When I am saying with restriction, it cannot be traded for how many years? 3 years. Now the market price of shares without restriction, they have given in the question, market price of shares कितना है? Market price of shares is 50. Market price of shares is 50. My question to you all, that value of shares with restriction which cannot be traded for 3 years will be more than 50 or less than 50 or equal to 50. ये बता दो. Everyone. Are you able to understand what I am asking? Correct. Now I am linking with the mangoes example. Mango में तो आपने बोल दिया less than 100. बताओ यहाँ पर the shares price of these shares with restriction will be less than 50 or more than 50 or equal to 50. बताओ. Everyone respond. It will be less than 50. Very good. Means I think you have understood. It will be less than 50. It means, can I say, the value of shares with restriction, the value of shares with restriction will be always less than value of shares without restriction. And what they have given, check करेंगे. Due to post vesting. Now you will understand. क्या बोला उसने? Due to post vesting restriction. Due to post vesting restriction. Due to post vesting restriction. Post vesting means once the shares are exercised, on transfer, the fair value of shares issued under the plan is estimated to be 48 per share, which is less than what? 50. 48 per share means इसका price कितना है? 48 per share. This has been estimated, so we are calling it fair value of shares, not market price, because that is not listed in the stock market. So we have valued it कि उसका value कितना होना चाहिए? 48 per share. My question to you all, in this plan we are dealing with these shares or these shares, means we are dealing with shares with restriction or without restriction. मुझे बताओ. With restriction or without restriction? In this plan we are dealing with the shares with restriction or without restriction. Everyone. With restriction or without restriction? Everyone respond. with restriction, so therefore we should consider which value of shares 50 ki 48. Of course we should consider 48. Means, can I say, if I want to calculate intrinsic value of option, तो बता, for intrinsic value of option we should consider 50 ki 48. For intrinsic value of option we should consider 50 ki 48. Of course 48. Therefore intrinsic value of option will be fair value of shares, with restriction minus what? Exercise price. Minus exercise price. It means it will be 48 minus 40 is equal to what? 8. Is equal to 8. ये एक अच्छी बात थी इस क्वेश्चन में. Have you understood this point? बोलो. Have you understood this point? It means intrinsic value of option will be 8, not 10. Means 50 minus 40 गलत हो जाएगा. It is 48 minus what? 40. Have you understood now this point? Have you understood? This point have you understood? बोलो. I think you have understood. Now let us come to the question. So they have said on 1st April how many shares we are offered 500, but how many shares were accepted 400 on 30th April. So directly we'll pass journal entry on 30th April for 400 employee. तो बताओ journal entries क्या होगा? Journal entries. तो on 38 April 2006 बताओ bank account debit. How many employee? 400. How many shares per employee? It is कितना shares per employee है? That is 100 shares into what? Into 40. Correct? So 400 into 100 into 40 is equal to 16 lakh. Then we write down employee compensation account debit. But the 400 into 100 into what? 400 into 100 into what? बताओ everyone. 400 into 100 into what? Everyone respond. 400 into 100 into what? अभी भी 10 बोल रहे नलायक. पूरा कहानी बता दिया, अब बोलते हो 10. नलायक. I said in this question we are dealing with the shares with restriction. So what is the value of shares with restriction? 48. 48 minus 40 is equal to 8. पूरा कहानी बता दिया, फिर भी नलायक लिखते हो 10. बोलो, यहाँ लिख दिया 8. Then also you are thinking 10. वाह रे वाह. Means you are not listening. 400 into 100 into 8 is equal to what? 3 lakh 20,000. 3 lakh 20,000. Correct. 2. Equity share capital will be 400 into 100. What is the nominal value? Nominal value is 10. So this will be 4 lakh. 4 lakh. 2 securities premium. It will be 400 into 100 into 38. Correct. So 400 into 100 into 38 is equal to 15 lakh 20,000. 15 lakh 20,000. Being 40,000 options exercised. And then on 31st March 2007 will pass one more journal entry. PL account debit to employee compensation account, that is 3,20,000. 3,20,000 means journal entry for ESOP and ESPP will be same. Journal entry में कोई फर्क नहीं है. Only the concepts are different for ESOP and ESPP. Correct? बोलो. Any doubt? Correct? तो एक नोट लिख लो from examination point of view. Student note. देखो under ESPP intrinsic value of option is equal to fair value of shares with restriction minus exercise price. If shares under such plan has no restriction, then intrinsic value of options will be equal to market price of shares minus exercise price. Then as usual we'll do correct. Understood this point? So I think all the points over. I think the last question also you have understood. Last question also you have understood. So this chapter is completed from my point of view. This chapter is completed from my point of view. Any doubt? Correct? So can we start a new chapter? Everyone. So ESOP is completed. Let us start a new chapter. Write down chapter number 2, buyback of securities. Buyback of securities. Buyback of securities. Now, everyone, what is the meaning of buyback? Buyback means what? Repurchase. repurchase of shares or debenture by the company. Correct now? Are you getting what I'm saying? Repurchase of shares or debenture by the company. तो when I'm saying securities, everyone मेरी बात को समझना. तो securities will include shares and debentures and debentures. Can I say the buyback of debentures already we have covered in group 1 accounting subject in redemption debenture. If you remember, we have done purchase of own debenture from open market for immediate cancellation or for keeping them as investment. So this buyback of debenture, can I say buyback of debentures is already covered in redemption of debenture chapter, redemption of debenture chapter. Correct? It means this buyback of securities is mainly concentrated on buyback of shares. मीन्स यहां पर हम इसके बारे में बात करेंगे ना. बायबैक ऑफ शेयर्स, इफ आई एम सेइंग शेयर्स, तो देयर आर टू टाइप ऑफ शेयर्स, इक्विटी शेयर्स एंड व्हाट, प्रेफरेंस शेयर्स. प्रेफरेंस शेयर्स. करेक्ट. इक्विटी शेयर्स एंड प्रेफरेंस शेयर्स. मेरी बात समझ पा रहे हो? तो बोथ कैन बी रीपर्चेज, both can be repurchased. Are you getting? But practically, this buyback concept is for equity shares, not for preference. I'm saying practically. As per Companies Act, we can repurchase both equity shares and preference shares. Both equity shares and preference shares. But can I say, as per Companies Act, preference shares are always redeemable. So if they are redeemable, the question of repurchase should not arise. Are you getting what I am saying? मेरी बात को? हाँ. Even though we can repurchase before the maturity date, before the maturity date. Correct? Now are you getting? But if I say buyback, why this concept was introduced? Why this concept was introduced? Correct? Now are you getting what I am saying? कि suppose मेरी बात समझना. This is one company, and in company I have started one company. मैंने start किया company. Suppose this is मुकेश अंबानी. मान लो मुकेश अंबानी. Correct? मुकेश अंबानी. Are you able to understand what I am saying? Mukesh Ambani. Now, Mukesh Ambani initially started, and suppose he was holding 40% shares. Correct? And now he has done public issue, and from public there are 60% shareholders. Correct? Now 60% shareholders. Now the question arises whether company can buy back shares from public. When I am saying company, it means Mukesh Ambani want to buy. Mukesh Ambani तो मैनेज कर रहा है पूरे कंपनी को. तो when I am saying company want to buy, means indirectly I am saying Mukesh Ambani want to buy equity shares. Correct ना? Are you getting? ताकि वो buy back कर पाए. Are we able to understand why he want to buy back? Because he want more voting power. ज्यादा voting power चाहिए उसको. Are you able to understand? Correct. तो it can be a situation कि क्या buyback कर सकते हैं. तो initially Companies Act used to say no, buyback is not permissible. Buyback is not permissible. Then later on, buyback was permissible under Companies Act, but with many conditions. With many conditions. Detailed discussion of buyback of equity shares will be done where in your Companies Act. I think buyback of shares has been already covered in your Companies Act. बताओ yes or no? Whether you have done buyback of equity shares. बोलो. Whether you have done buyback of shares in your Companies Act. Yes, sir. So I think your teacher has already informed you about the restriction on buyback. Means We can buy back, but there are many terms and conditions for buyback. It is not easy to buy back equity shares from the market. If we can follow all the terms and conditions, then we can buy back. Correct? So I'm not going to teach you the terms and conditions. I will teach you only those terms and conditions which is required for my subject. But we are concentrating here for accounting treatment of buyback. But can I say one thing is clear, that these preference shares are redeemable. Already we have done one chapter, redemption of preference shares. Correct. And these equity shares cannot be redeemed. These are not redeemable. These are not redeemable. Not redeemable. Correct. But but it can be bought back. Are you getting? Means it can be repurchased. So it can be repurchased. It can be repurchased from market. It can be repurchased. When I am saying buy equity shares can be repurchased, it is nothing but repayment. When you repurchase from equity shareholders, it is nothing but you are paying to the equity shareholders. Correct now? So can I say repurchase or redeemable, both are same only. So when I am saying buyback, when I am saying equity shares are not redeemable, of course these are irredeemable. Means there is no redemption date. We can purchase only if the equity shareholders want to what sell their shares. Means we need to give an offer to the existing shareholders. If they want to, sell their shares, then it can be repurchased by the company. Are you getting what I am saying? Means when I am saying redemption is known at the time of issue only, but buyback is a special situation which may arise during the lifetime of the company. But can I say the common point between redemption and repurchase is what? Payment of capital, repayment of capital. Means in both we are doing repayment of capital. Already we have done journal entry for redemption of preferences. When I have done redemption of preferences, we said that because there is a repayment of capital, there is a reduction of capital. Therefore, what we should create? बताओ हमें क्या create करना चाहिए? Everyone. In case of redemption of preferences, when we redeem preferences, it will reduce our capital. When it will reduce our capital, then company X says that we should create what? बताओ. We should create what? Everyone. हमें क्या क्रिएट करना चाहिए? Very good. I think you remember CRR, capital redemption reserve. Very good. Correct. Understood this point? So in this case also, when you want to buy back your equity shares, can a CRR need to be created? And if you cannot create CRR because of insufficient balance of reserve, then we should make the fresh issue of equity shares. Understood? Correct. Same thing is written right now. As per now, so I think you know the sections. Which section for buyback? Which section under Companies Act 2013? Bolo. As per section 68 subsection 1 of Companies Act 2013, चेक कीजिए, आई थिंक इट इज 68. A company can buy back their या buy back its own shares, correct, out of its point number A, out of its point number A free reserve. Now you know free reserve. Point number B, the securities premium, or point number C, the proceeds from fresh issue of shares, correct. You remember this point? So without discussing much, can I say we need to comply one equation? Conclusion is what? Conclusion is what? Nominal value of equity shares bought back must be equal to CRR plus nominal value of shares issued. Remember, same thing we have done in redemption of preference shares. So when I am saying nominal value of shares, so these shares can be either equity shares or preference shares. Equity shares or preference shares, correct? And this CRR is created from free reserve, free reserve, correct? So I think no explanation much required. I think you are understanding, correct? So this equation is to make the capital intact. So when you are repurchasing, your capital will reduce. So that may violate the interest of the creditor and debenture holder. To protect the interest of creditor and other debenture holders, we need to make our capital intact. Remember, same explanation we have done where हमने कहाँ पे किया था? Redemption of preference shares में. Right on accounting treatment. Accounting treatment. Point number A. For amount due to equity shareholders on buyback, correct? Thread on entry will be what? Equity share capital account debit, correct? Premium payable on buyback, account debit to equity shareholder, account. So this is with nominal value This is with buyback price, and of course this is with premium which we are paying. So buyback price minus nominal value, this is premium. With premium, that is a loss for the company, correct? Understood? Then add on point number B, for writing off premium on buyback of shares. So what journal entry? So now we can use securities premium, account debit, correct? The securities premium can be used to write off this, correct? And if securities premium is not available, then we'll use free reserve for writing of what? Premium on buyback. However, in redemption of preference here, I said it will be written up through current year PL. वहाँ PL account से write off करते हैं, correct ना? तो because redemption of preference here, that is the one type of liability. तो उस that means redeemable preference shares is nothing but one type of liability that is debited to PL. यहाँ पर it will be written up through equity only, means reserve and surplus only, correct? ये PL में नहीं जाएगा. Have you understood this point? ये difference है. To what? Premium payable on buyback point number C. ठीक है. Point number C. Now for compliance of Companies Act we need to create CRR. देखो, for compliance of Companies Act, point number 1, for creating capital redemption reserve. तो what journal entry? Free reserve account debit to CRR, or point number 2, for issue of new shares. तो journal entry what? Bank account debit to equity share capital to securities premium. Means better I am writing share capital so that it can be either equity shares or preference shares, correct now? So to share capital to securities premium if it is issued at premium, correct? So it can be either equity shares or preference shares, correct? Understood? Then point number D, for payment to equity shareholder, for payment to equity shareholders, what journal entry? Equity shareholders account debit equity share holder account debit to what? बैंक। अंडरस्टूड? बोलो। सिंपल। सिंपल। I think I say same class of shares cannot be issued, but different class of shares can be issued. Different class of equity shares can be issued ना? करेक्ट ना? आपको क्लास का मतलब पता है कि नहीं पता? मैंने यहाँ लिखा सेम क्लास. The terms and condition is same class of equity shares cannot be issued. Means whatever you have purchased, the same class of that equity shares cannot be issued, but different class of equity shares can be issued. अब इससे ज्यादा आप फिर कंपनी एक्ट में पढ़ लेना. करेक्ट ना? तो टर्म्स एंड कंडीशन आई एम नॉट एक्सप्लेनिंग, आई एम टीचिंग यू ओनली व्हाट अकाउंटिंग ट्रीटमेंट. अभी मैं आपको टर्म्स एंड कंडीशन बताऊंगा, तब तो मुझे कंपनी एक्ट पढ़ाना पड़ेगा आपको. उसका फीस तो आपने मुझे दिया ही नहीं. करेक्ट ना? हैव यू अंडरस्टूड नाउ? करेक्ट? आगे चलें? यस सर. Let us take one question. Come to question number 1. बड़ा simple chapter. Question number 1. Kuber Limited furnished you with the following balance sheet as at 31st March 2000. Correct? So you can see sources of funds, share capital, authorized, issued 12% redeemable preference shares. Redeemable preference shares 75, equity shares 25 crore. Then they have given capital reserve, securities premium, revenue reserve. Correct? Understood. Then funds employed in fixed asset less provision for depreciation, investment at cost, current asset less current liability. Correct. The company redeemed preference shares on 1st April 2000 at a premium of 10%. It also bought back 50 lakh equity shares of rupees 10 each at rupees 50 per share. At rupees 50 per share, this is buyback price. The payment for the above were made out of used bank balance which appeared as a part of current asset. बोला पेमेंट का चिंता मत करो, बहुत सारा बैंक बैलेंस है हमारे करंट एसेट में. You are asked to pass journal entry and prepare a balance sheet. Means in this question both I have given redemption of preference shares as well as what? As well as what? Buyback of equity shares. So first we need to find out calculation of CRR required. Calculation of CRR required. So if no fresh shares has been issued, it means entire capital intake will be done through creation of CRR. Correct? Understood? Right on. We are doing question number 1. Working note number 1. Calculation of CRR required. Correct? देखो point number A. For redemption of preferences issued. What is the nominal value for redemption of preferences? What is the nominal value of preferences redeemed? Nominal value of preferences redeemed. Correct? That is 75 less nominal value of shares issued 0. So how much CRR required? is 75. Correct? Then point number B, for buyback of equity shares. What is the nominal value of equity shares bought back? How many equity shares we have repurchased? तो बोला it also bought by 50 lakh equity shares of rupees 10 each. तो 50 lakh into 10 is equal to 5 crore. 5 crore less nominal value of shares issued, nothing. So how much CRR required? CRR required is equal to 5. So what is the total CRR? Total CRR is equal to 80. Correct? Understood? Write down. Bookshop will pass journal entry. Bookshop. I am assuming that you are understanding because very easy. Correct? Bookshop Kuber Limited. Journal. Bookshop Kuber Limited journal. बताओ. What journal entry for redemption of preference shares? First journal entry. So it is 12% redeemable preference share capital account debit 75 crore. So these are rupees in crore. Then premium payable या premium on redemption of preference shares, on redemption of preference shares. How much? तो 75 का 10% 7.5 to preference shareholders. To preference shareholders, it is how much? 82.5. Correct? Being amount due to preference shareholders on redemption. Correct? Point number 2. Now we'll pass journal entry for equity share capital. Write down equity share capital account debit. Nominal value is 5. Then premium on buyback of equity shares to equity shareholder, to equity shareholders. So what is the buyback price? It is 50. So 50 lakh into 50 is 2500 lakhs. So it is 25 crore. So it is 2500 lakhs now. So it means it is 25 crore. So premium कितना आया? 20 crore. Premium is 20 crore. Understood? Being amount due to equity shareholders on buyback, on buyback. Then point number 3. Correct? point number 3. Understood? So we will write off premium on redemption of preferences with PL account. The profit and loss account debit to premium on redemption of preferences. If you remember this point, 7.5. 7.5. This is as per accounting standard. One point I have given, as per accounting, it means if company is following accounting standard notified under company's accounting standard rules 2006, then this will be debited to PL account. ऐसा कुछ याद है आपको लिखवाया था? Do you remember? बोलो. Narration you can write down. Then we'll use securities premium. Securities premium to write off premium on buyback of equity shares, that is 20. Whether we have sufficient securities premium? Yes, we have sufficient securities premium, 20. Then we'll create CRR. CRR बनाएंगे 80 का, 80 crore CRR. तो we have sufficient revenue reserve, free reserve. Revenue reserve means free reserve. तो what journal entry? Revenue reserve account debit to CRR, that is 80 crore being CRR created. Then we'll make payment to what? Preference shareholders and equity shareholders. Write down. Preference shareholders account debit कितना पेमेंट करना है? 82.5. एंड इक्विटी शेयरहोल्डर्स अकाउंट डेबिट उनको कितना पेमेंट करना है? 25 करोड़. टू बैंक बैलेंस दे हैव सेड दैट वी हैव यूज्ड बैंक बैलेंस इन करंट एसेट. तो करंट एसेट 340 करोड़ का है, तो पेमेंट कर देंगे. दैट इज 107.5 being amount paid to shareholders. Being amount paid to shareholders. Correct? Have you understood this point? Correct. All the journal entries done. Very simple. Can you prepare balance sheet by your own? So with one question I have given you the entire concept of buyback of equity shares also. I think very simple. बताओ बहुत आसान chapter है because already we have done redemption of preferences. In case of redemption of preferences I have taken a time. But यहाँ पे क्योंकि आपको सारी बात पता है तो टाइम लेने की जरूरत ही नहीं है. Correct? I think you have understood. Can you do question number 2 as homework? Do question number 2 as homework. Question number 2 is a good question. Let's see whether you can do it by your own or not. So question number 2 will be homework. आज के लिए इतना ही. For today this much only. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day. Bye bye. Take care.